Hello traders, Mike Mohebi here. Today is 27th of July 2019 and market is closed. Let's take a look at what happened last week. Okay, we start with USDCHF. As you could see, we had this beautiful trend, but it ended on Thursday and it broke the resistance line and it closed above, and on Friday as well. So if you get a signal here, you can enter, or you can wait until you have a pullback down there and then going up. This is a very good pair. USD CAD, we have the same happening here, but the trend is a little bit sharp. You can't trust this kind of trades, you know. You have to wait for the pullback. It comes down, touches this moving average 21 and makes a lower high, and then you can enter. But for now, it's kind of a, if you enter here, it's gonna hit your stop loss. USDJPY is the same. You see this one broke, came back down and broke again. So we have a, let me grab my pen. See, we have a low and a higher low, high, and we still need another higher high. So if you have another higher high coming back down and going up, breaking this high, you can enter here. So far, it's not a good time to enter. Just wait for a couple of days to see what happens. I look at the USD Singapore dollar as well. This one moved up and it's almost too late to enter. Wait for the pullback again. Okay, euro pairs, this euro USD, we had this big candle here with these big wicks. I think almost it hit all the stop losses, top or bottom, whatever, trailing stop. They wanted to flush out all the sell positions and they did. Market is at the low. As you can see, we have this level here. So all the lows here, the top one. So it came back up, touched the top, and then moved back down. So everyone who had a position here, either the stops or the pending orders down here, all of them took. And I think they did it on purpose. The banks did it. And let's see what happens next week. I don't get any trades, maybe continuation trade if you can, but the market is at the low, touching all these bottoms here. It's a very strong resistance line. I don't recommend to enter here. EURJPY. So this one was in a very strong trend going up, came back down. I had a trade and it hit my trailing stop. You know, I trailed my stop break even and it hit that. But I'm pretty sure many of the traders had a sell position and either they are in the losing position now, draw down, or just hit their stop losses. So that's why just when you have these strong trends, you cannot enter exactly at the turn of the point up there. You just wait until the market goes down, comes back up, make it like a lower high and lower low. So the trend is confirmed and then you can enter. This time, yeah, it hit my stop loss. Well, I trailed my stop, but it hit it. So I didn't lose any money, but I couldn't get any money. Actually, down here, I was in a very good profit. I entered there 75 pips profit. But my target, as you can see here, my 100% ATR is 50 pips. So my ATR was in 100 pips. My target was twice the ATR. So I trailed my stop down probably after the 50 pips, and then it came back up and hit my stop loss. Euro AUD, this one was in the channel, as you can see here. And last day, Friday, it broke the channel. I think it's gonna come back down. So wait for the Monday to see what happens. But it's a very good pair to trade. If you remember, we had this beautiful head and shoulders pattern here. I exited my trade there, exactly at the top of that candle. So I had a trade almost on top there, and I exited there. I think I had in one micro lot 19 something dollars, so about 190 pips. Let's check how much was it. I exited there. I think I had the trade there because of that pin bar. So I had a 190 pips profit up from up there to down here. It was a very nice move, but it's almost ended, so we just wait to see what happens. EURCAD, this one is a downtrend, fluctuating for the past 2-3 weeks. Nothing's happening. Again, the people who had it pending order down here, you know, probably this could be a support, and people put like 10, 15, 20 pips trade down there. It took all of those trades, and probably most of them are in a negative drawdown, or either they hit the stop loss and they're out. So they do all these kind of dodgy things, the big banks and hedge funds. So EURJPY is the same thing, fluctuating down and it's doing nothing almost in the daily chart. We have the 3 lows. It made a lower low, but it's just fluctuating for a while now. We have a channel here like this. Probably it's gonna go up if it breaks this 21 moving average. Just wait, see what happens. If you get a signal here, you can enter, but if not, just wait for the next week. These pairs are almost the same, all the euro pairs. As you can see, we have a small trend going down. This one is more obvious, but the previous one's not. We have this big candle. I don't like when the price is between these two moving averages. It's gonna fluctuate a lot. As you can see, every time it's between these two moving averages, it's gonna hit your stop loss if you have a tight stop, or it's gonna go to the negative down. You expect it to come back up, but it doesn't work. I checked it many times. The best thing you can do is just draw these small resistance lines, like a trend line. And whenever you have the break, you like this candle or that candle here, you can enter. So you enter almost at the end of this candle and you have a very big move down here, or under there, another one down here, something like that. This is the best way to trade of these in these kind of conditions. Do not expect to have a very good reversal trade. It doesn't work. The continuation trade is probably the best. Euro New Zealand, this one is the same. We had this head and shoulders, if you can see. Yeah, this is more obvious than the trade, the Euro AUD that I had. So Euro New Zealand, these two pairs move the same. You know, Australian dollar and New Zealand dollar are almost the same. One of them is more obvious, the moves every once in a while. Now it's New Zealand, sometimes it's Australian dollar. So if you had this trade, probably you could enter at the break of this low, or this pin bar could be the signal, and then you could exit probably on top here. You know, when this 3 candle pattern happens, you could exit the trade. And let's see how much it is. If you had closed your trade there and entered at the low of this 150 pips, or you had this trade here 260 pips. So if you had a continuation trade, like I said before, this candle could be the signal for you. So you could enter at the close of the candle, which was there, and exit there 260, or down here. The market moved 360 pips, but you couldn't get all of that. You don't know when it's gonna end. When this candle formed, you could exit there as well. I prefer to have the 3 candle. You know, the 3 candle is it's a very good sign that the market's gonna reverse. So whenever you get the 3 candles, and whenever they are almost the same, it's a very beautiful sign to enter. You could have another exit, another trade here. So if you had a trade there, and you put a stop loss almost at the bottom there, 100 pips, you could have 135 pips so far, 140 pips. I would get that trade. That's a reversal trade, and it's not confirmed that the market's gonna change direction. So it's still under the 21 moving average. So you could close your trade right now at the close of the market today. Euro Singapore dollar, choppy market. If you had a big trade up there and if you have trailing stop, probably will hit your stop loss. No way to trade this market, but market is at the low, as you can see. If you draw this line here, you have 3 lows and 1 up there as well. So 1 there, another one here, and right now. So market's gonna go up. We still probably, but we still wait, you know, it's not confirmed yet. Whenever the market changes direction like this one, breaks above the 21 moving average, coming back down, breaks above, and then cannot close below, this candle is your signal line. So draw a line there, and then this candle hits your pending order. So if something happens up here, you can enter, but so far there is no signal. Wait till the market comes up, comes back down, and then whenever it goes up above that, that's the best way to enter in these kind of conditions. Now we go to the pound pairs, GBP/JPY, very strong downtrend. So the continuation trend that I told you here works better. As you can see, we have a small resistance there, kind of a small trend line, and the market broke. We have another one here, we have this big candle, another one down here, another candle, and probably we're gonna have another one. But as you can see, market is just slowing down. It's getting ready to turn. Maybe it goes up, very fluctuating, and then goes up. So we can't tell what's going on. But at the moment, you can't get any signal unless you get a small trade after the market opens on Monday and put your stop loss on top here. So you can have a small trade, but the ATR is 85 pips. So you're gonna have a very big stop, you know. So you must be careful to have a small position. Even if you lose the trade, you don't lose much. Next one, GBPUSD. This one is the same, but more fluctuating. Market broke this line here down there and closed under the support line. So this shows that the either US dollar is getting stronger or pound is getting way weaker than it used to be. And we have these small trades. Again, the continuation trend trades would work very good here. One, maybe this is a small one here, another one down there, another one. As you can see, these small ones, you could win a lot. I don't recommend to add these positions, so do not add to your positions. Just open one and close it, open another one and close it again. You can't wait from the bottom here to market go up and then comes back down and then you get another trade there. That's kind of a, it's not wise to have a profitable trade, make it to a down drawdown, very strong drawdown, and then add another position to that. So open a trade, close the profit. So if you had the trade there, this market was 160 pips. If you had this trade, you could enter maybe after the close of this candle. The market moved about 220 pips and you could close your trade maybe at the low of this, the previous low, 160 pips. This one that we looked at, market moved 150 pips, but you could exit at 120 at the close of this candle. The other one as well, maybe only 100 pips. This one as well, maybe about 9,500 pips as well. So this is the way to trade when the market is trending very strongly. And it, as you can see, couldn't break almost through this resistance here. Even if it closed above, it just came back down. So this is the way to trade these trend lines. GBPAUD, this is the same, more obvious trades. So we had one there, another one, and probably it's gonna form another one. We still wait. We have these two pin bars here. So let's see what happens in the next Monday, Tuesday. If you had a break like these two bearish candles here, or like up the previous ones, you can enter and you have a very good target. Maybe you put your target down here. GBP New Zealand, this is almost the same. As you can see, when you group these pairs together, all the pound pairs, you should enter only on one or two of them because they almost move in the same directions. GBP CAD, this is the same, but not many continuation trades. It's just a strong downtrend. GBPUSD, as you can see, these are all the same. GBP, Singapore dollar, this is the same as well. So out of this, like a 6-7 pound pairs, you could get 1 or 2 of them. That's it. Just too much drawdown on your account is not wise. Do not enter in the same currencies. If one of them moves in your direction, it's good, but if it moves against you, you're gonna lose a lot. So I recommend to group them together like I did. This is Australian. Now we go to the Australian dollar. We have 5 Australian pairs. It's a very good market for the not reversal, just the going up and down. Every time you get a signal, you enter one there. This one, again, you draw this line and you get a signal probably around there or maybe above here, and you enter. You have a very big rally up. This one fluctuated, probably hit your stop loss after this candle, and then you could enter down here and draw the market down. Maybe again this candle here, enter here upward, you have this up move, or could enter at this close of this candle and you have 3 big candles down here. So how many pips you could have in the past 2 months? So the first one, about 100 pips. This one here, about 90, again 100 pips. Third one, about 60 pips, so 260. Maybe you could enter up here. This one was huge, 130 pips, so 290. And another one here, 390 pips you could have in the past 2 months only trading this pair. As you can see, if you can see the market from the bird's eye view, you can enter and draw. You don't need any indicator, you know. So far you just entered when the price broke the resistance line, the trend line. It's easy. So if you see AUDUSD, the New Zealand USD is the same almost. You see these 2 pairs, Australian dollar and New Zealand dollar pairs, are almost identical. Sometimes the Australian dollar moves are more obvious, sometimes the New Zealand dollar moves are more clear, so you can get a signal. But this one, the New Zealand dollar, is much better because it moves more clear and no choppy. So every time it breaks the resistance line, the trend line, you could enter and you have a very good trade. Australian Canadian dollar, this one is almost, it seems that it's gonna change direction, but not so far. We have these lower lows. So far it hasn't broken this, the lower low, the last one. We had a higher high. So if the market moves back up and this is a higher low, we have a change in the direction and we should wait until it breaks this high. If it breaks this high, we can enter. But so far I don't recommend to enter. If you want to enter in a continuation trade, you draw this line here. Whenever the market moves up, maybe 1 to 2 Monday, Tuesday, if the candle closes above this line, you can enter. But so far, nothing. I think that on Monday we're gonna have a bullish candle after this huge candle on Friday. AUDCHF market moved during past 3 weeks above the 21 moving average, but it couldn't hold. Every time it broke, came back down, touched it and broke again. So far is under the 21 moving average, and I think we're gonna have a choppy market here. So draw these lines again. As you can see, we had one here. The second one hasn't formed yet. So wait until the price breaks this resistance line, this trend line, a small one, and you can get a trade. Maybe you can, it's not that much. Let's see. If the market breaks this trade, probably around up above this candle, you can have a 60 pips. It's not much. Maybe you go to the 4-hour or 1-hour chart, you get a good trade, but I trade only on daily chart, so this is not good for me. But if you can get a good signal, this is not bad. You know, market, when the market going up and down like this in the channel, every time it hits the bottom of a channel, you can get a signal upward and you can get a good trade. Australian New Zealand dollar. So we said that the Australian dollar and New Zealand dollar move in the same direction, the pairs, but when it comes to both of them together, it's very choppy because they move the same. So their movement to compared to each other is kind of a very choppy market. There's not, well, there is a trend, but that doesn't mean that you can get any trade. You can see we have this channel going down, but I'm pretty sure you can't have any kind of a stop loss that you can hold. Every time market moves down, we have these big candles and it comes back up, hits your stop loss. It doesn't matter what you do, it's gonna hit your stop loss. So I don't recommend to trade this kind of market. These markets in the lower time frames are very good. Let's see in 4-hour chart and 1-hour chart. So you see in the 1-hour chart, you have very big moves. This move about 50 pips, very good. The next one, you could get about 40 pips. This one, 28, 30 pips. So if you don't see any kind of a trend in the higher time frames, you have these choppy moves, you can go to the lower ones and you get a very good trade there with the small targets. So the ATR at the moment is 6 pips. So a 20 or 30 pip trade is kind of a 4 to 5 times reward to risk ratio. If you can get that, you know, if your system generates a signal for you in the lower time frames, your chances of winning is much higher with the lower, you know, risk to your account. And the Singapore dollar is the same. As you can see, market is very good for this kind of fluctuating trades if you have. So we looked at the New Zealand USD, New Zealand CHF is almost the same. Market is going up, but couldn't hold on Friday and closed under the 21 moving average. Let's see what happens on Monday. New Zealand CAD is the same. We had the past week very strong downtrend, 4 bearish candles. The market hasn't closed lower than the lower low, the past low. But if it does and goes up, you're gonna see a change in the direction. So far we have a higher high compared to the previous one, so it means that the market is about to change direction. So we wait until we see a very strong move upward and a higher low. Now we have Canadian dollar, Swiss franc. This one is in a very good channel, as you can see here, up and down here. So every time market comes back down, it touches and goes up. Well, the last one didn't move much good, but you can see you can have very good trades here. So what you must do whenever the price gets to the high or low, you just wait until it generates a very good signal. As you can see on top here, the previous time we had this small channel here and the market just fluctuated inside this channel, and whenever you see this big candle here, when it broke the channel, the lower of the channel, it just crashed down. And your move is about the close of this candle, it's about 60 pips. It's not much for the daily chart, you know, for the daily time frame, but you know, the ATR of 43, you know, the average between the average of the movement during the past 10 days has been 40 pips. So 50 pips is like a one-time ATR, not much, but you could have a very good trade in a 4-hour chart, you know. Yeah, 68, 70 pips, and your ATR is 16 pips. So it's like a 3-4 times of ATR. Very good move in the H4. So let's go to the last ones. Canadian dollar, JPY. This one is getting ready for those who want to trade these kind of a small resistance line. If the market closes above this line, you can enter and your target's gonna be a little bit higher. It's gonna make a higher high. So this is your previous high. Maybe the other high is up there, I don't know. So let's see how much your target can be. If it closes above, let's say it closes above there, almost at the bottom of this candle, your target can be about 9 pips. with the ATR of 3840 pips, that's like twice, at least twice, 2.5 times of your risk. And it's a very good trade. So just wait for the next week until the price breaks this line, and then you can enter. And the last one, CADJPY. This is very choppy. I don't think you can even get a trade in the lower time frame. As you can see in the H4, no trades. In H1, yeah, maybe in the H1 you can get some, but I don't trade H1. If you do, you can go lower and trade there. But so far, nothing in this pair. Now, the last ones are silver and gold. This is silver versus US dollar. As you could see, silver had a very strong move during the past 3-4 weeks. We had this line here, it broke. Probably we're gonna have another one up there. So the silver is not gonna go down again. It's just the price in the world is going up, and we expect to see very high moves, strong uptrends in the silver and gold. So, but so far, it just market's gonna fluctuate. It's gonna come down, maybe to this low. So when the market is going down, whenever it breaks and it goes up, you can enter upward. But so far, just nothing. Wait to see what happens. Gold is the same. As you could see, we talked about it during the past 2-3 weeks. We have this triangle here. That's the pole of the triangle, flag, and it's moving like that. I had a small trade up there, 10-15 pips up there. It took my trade and it came back down. I'm still in the trade because my stop loss was very low, but the pip value of the gold and silver is very high, so be careful. You're gonna have a very low, very big drawdown if you don't exit. So far I'm in a losing position, but I think the market's gonna go up. Let's see if the market breaks this, the low of this triangle is gonna go back down, maybe to this level. But if it goes up, the target's gonna be almost like about 1,000 pips. 1,000 pips is a huge move upward, and it's gonna be very sharp. So put a small, maybe pending order up there or above that level to see what happens. If the market goes up, you enter. I don't recommend to sell the market. Do not sell the gold and silver at this moment. It's in the whole world, the market is just pushing the smart money towards the gold and silver. So be careful what you do. So far, it's just fluctuating, but I don't sell this and wait for the buy signal. This was for today. We'll check all the market. If you have any questions, please ask in the comment section below. And if you liked my video so far, please give me a thumbs up. That helps a lot. And subscribe to my channel. I'm uploading a lot of videos. I've prepared them, and it's gonna come out during the next weeks. Hopefully you're gonna have good trades next week. See you next time.